Last time, we watched big tech resurrect a dead nuclear reactor to power artificial intelligence. But a reactor is just a machine. It doesn't run on ambition, it runs on fuel. And the specific fuel the next generation of reactors needs has a problem. There is only one country on Earth that produces it at commercial scale, and it isn't the United States, it's Russia. Sit with that for a second. The most important technology race of our lifetime depends on a fuel that only our biggest rival can make. For decades, the West simply bought it and didn't think twice. Then, the war in Ukraine turned a quiet dependency into a strategic emergency. So today, one question. The entire AI nuclear boom depends on a fuel controlled by a single adversary. Who wins the race to take that control back? Let's be precise about what this fuel actually is. Ordinary reactors run on uranium enriched to about 3 to 5%. But the advanced reactors everyone is now betting on, the small modular reactors, the next generation designs need something stronger. It's called high-assay, low-enriched uranium, HALEU, enriched between 5 and 20%. And here is the problem in a single sentence. The advanced reactors that big tech is pouring billions into physically cannot run on standard fuel. They need HALEU. And Russia is currently the only country producing it commercially. So follow the chain. AI needs power. Power increasingly means advanced nuclear. Advanced nuclear needs HALEU. And HALEU, right now, means Russia. The most futuristic corner of the American economy is quietly dependent on its biggest geopolitical rival. How did this even happen? Russia's state nuclear giant, Rosatom, spent decades building something the West let wither. Not just enrichment, but the entire chain. Mining, conversion, enrichment, and fuel fabrication all under one roof. All subsidized, all offered cheaper than anyone could match. The result? Russia controls roughly 40% of the world's uranium enrichment capacity. It supplies around a third of the enriched uranium the United States imports. And for HALEU specifically, its commercial monopoly has been total. There's an even deeper vulnerability most people miss. Before uranium can be enriched, it has to be converted into a gas. Russia built multiple conversion plants. The United States has just one commercial facility. One. For the entire country. So even if America builds all the centrifuges it needs, the bottleneck simply moves one step up the chain. You don't fix a dependency this deep by solving one piece of it. This is what a real choke point looks like. Not one weak link, a whole series of them. And now the West is scrambling. In 2024, the United States banned imports of Russian enriched uranium, with waivers running only through the end of 2027. That ban unlocked $2.7 billion in government funding to build domestic enrichment capacity from almost nothing. $900 million went to one company specifically for HALEU. Another $900 million went to an advanced enrichment startup backed by Peter Thiel. But here's the honest, uncomfortable timeline. Meaningful domestic HALEU production isn't expected at scale until around 2029 and into the 2030s. But the reactors are being ordered right now. The contracts are being signed today, and the fuel to actually run them is years behind. That gap between when the reactors arrive and when the domestic fuel is ready is the entire investment story. So if the West has to rebuild an entire fuel chain from scratch, who actually gets paid to do it? Start with the one name at the center of everything. LEU. Centrus Energy. Centrus is the only licensed producer of HALEU in the entire Western world. Not one of a few, the only one. Let that sink in. An entire hemisphere's answer to a Russian fuel monopoly currently runs through a single company. It's already signed a deal to supply an advanced reactor developer, and it carries a multi-billion-dollar backlog stretching to 2040. This is the lone Western producer standing against a state monopoly. That's a rare position for any company to hold. Then the Tier 1 anchor, CCJ, Cameco, one of the world's largest uranium producers with mining, milling, and fuel services under one roof. It also owns nearly half of Westinghouse, which means it touches both the fuel and the reactors themselves. If Centrus is the high-stakes bet on the choke point, Cameco is the steadier, lower torque way to own the entire theme. Two more names, each playing a very different role. UEC, Uranium Energy, a domestic-focused miner with a debt-free balance sheet, positioned as one of the sharpest beneficiaries if the government mandates American-sourced fuel. When policy is actively trying to reward domestic supply, the company with clean books and American production is exactly the kind of name that gets re-rated fast. And finally, the challenger, ASPI, ASP Isotopes. Through its Quantum Leap Energy subsidiary, it's developing its own HALEU enrichment technology, attempting to become a second Western source in a market where Centrus currently stands alone. Every monopoly invites a challenger. This is the company betting it can be the one to break in. Higher risk, but that's the nature of a challenger. Now the part almost no channel will do. Let's argue this whole trade could be a trap, because there's a serious case that these stocks are priced for a future that may not arrive on schedule. First, the timeline. Commercial-scale domestic HALEU is years away. These companies are spending heavily now for revenue that mostly arrives late in the decade. A lot can change in that gap. Second, the waivers. Russian fuel isn't fully banned yet. Waivers run through the end of 2027, and cheap Russian supply keeps leaking into the market, pressuring prices for everyone trying to build an alternative. Third, execution and policy risk. The lead name depends heavily on government appropriations and contracts. Its own earnings estimates actually decline year over year in the near term, as it pours money into its build-out. If Washington's priorities shift, the whole thesis wobbles. And fourth, valuation and volatility. These stocks have already run hard. The leader has traded far below its own recent highs, a reminder of just how violently these names swing on a single headline. So, hold both ideas at once. The strategic need to break Russia's fuel monopoly is real and structural, and the stocks that play it are volatile, early, and dependent on politics. The signal is the mandate. Whether today's price already prices it in is a question only you can answer. So here's the map of the race to break the fuel monopoly. LEU Centrus, the only licensed HALEU producer in the West. CJ Cameco, the Tier 1 anchor, fuel and reactors. UEC Uranium Energy, the debt-free domestic supply play. ASPI Isotopes, the challenger trying to break the monopoly. A watch list, not a recommendation. Every name here carries policy, timeline, and valuation risk, and these stocks are unusually volatile. Do your own research. Here's what stays with me. The most advanced technology in human history, artificial intelligence, is quietly bottlenecked by a Cold War fuel chain the West spent 30 years letting rot. So tell me, is breaking Russia's fuel monopoly the most obvious infrastructure trade of the decade? Or are these stocks already priced for a fuel supply that's still years from arriving? Make the case against me, comments below. And next time we step back and look at the whole board, chips, power, fuel, we followed each bottleneck one by one. Now, the question becomes, where does the smart money actually go when every layer is constrained at once? That's next. Real data, not headlines. This has been Alpha Signal.